I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. Futures are slightly higher this morning ahead of the Cyprus Parliament vote scheduled for later this afternoon. Turning to yesterday, it was only when the vote was announced that it would be postponed indefinitely that shares turned lower. So I'm wondering how much the market's behavior will be tied to the results of this vote later today.
Well, the overall theme now of the market is just obsessed with this whole Cyprus situation. Starting from Sunday night, futures are down like 16 handles, so everyone walked in yesterday, and nobody truly knew what was going to happen. You never know. You only could measure the action. So yesterday we walked in, futures are down like 15 handles. By the time 2 o'clock, 3 o'clock, we almost went positive, and then, like you said, the vote got postponed, and then the market sold off a bit to end down 60. But overall, I would say if you're a bull, you really like that action. But overall, I think there was a lot of frustration because no one was coming in yesterday to go guns blaring to start buying the first dip, not knowing where we're going to go. And if you were a short and you started shorting Sunday night, or you shorted the open, and then we rallied back and now we're up, now you're just as frustrated. So all in all, I think the bottom line is don't do anything too quickly.
And coming in yesterday with 9 long positions and 1 short, did you like yesterday's action? How did you fare?
Well, I made money yesterday with 9 longs and 1 short in a down tape, so that means I was able to embrace the volatility. Not everything was created equal, and that doesn't always happen. Sometimes you get trapped. We could have opened down 16 handles and closed down 32. We didn't. We opened down 16 handles, and you had a lot of opportunity to make adjustments. And that's what I want to somewhat preach here, is that on Sunday night, if you were jumping out of your shorts or whatever you were wearing to go to bed, that you felt so uncomfortable because of what you were reading about, that means you had too many longs on. Maybe you had too much margin, maybe you had whatever. So yesterday as the market went positive, you probably should have made some adjustments. And even today, the futures are up. Even if we go higher, blast through new highs, if you were controlled by the headlines over the weekend, lighten up or put on some hedges that could take away from some of your longs, but make sure you feel a bit more comfortable. You should never be in such a panic state. And if you were, a bear and you're like just looking to claw into the market and you started shorting Sunday night versus watching a good TV show, what do you watch on Sunday nights?
Revenge when it's on. I'm a fan.
Oh, yeah? So You should have been watching Revenge with Brittany versus watching, the S&P futures market, And then, again, if you just shorted the open and you were in such a rush, right now you're probably not feeling so good. So the bottom line is don't do anything so quickly. Measure the action, monitor the action, and do what makes you feel comfortable. And also just don't read every headline you see out there and obsess about it.
Well, as we always talk about, volatility creates a lot of opportunity. Before we get into some of those spots where we can find that opportunity, why don't you show us the key levels in the S&P we should be paying attention to? Okay,
and if you paid attention to them yesterday, you would have seen that the market, again, took it in stride. You look here at the chart, this has been the whole trend, so to speak, since last November. Here's that November low. Here's where we started the year. We ignited above this downtrend. This is when we took out 1474 coming across. Then we had a nice move. And finally, remember, with the Italian elections, this is when some volatility picked up. This is when we broke the 8-day moving average. And we had like a 45 handle correction in a very short time period before reversing, holding higher and going again. So you look where we are now. You had another nice trend all the way to the upside yesterday. We broke the 8-day but tried to reclaim it. So now I would say here is your new point of reference. Okay, we have a low here from yesterday at 1545. The longer we stay above this 1545 and go sideways, get a little bit more clarity on what's going on over there, or at least some more headlines to absorb. The higher the percentage, we take out the high here and go towards that historic high in the S&P. But if we were all of a sudden going to start taking out yesterday's low, the next level I want you to watch is going across here around 1530 to the 21-day at 1534. So overall, here's our new point of reference. Let's see. Hopefully, we have an inside day. I think the world could use an inside day yesterday, because I don't know about you. Today doesn't feel like Tuesday. It feels more like Thursday because of this 24-hour news cycle.
Right. It's been a little exhausting, right?
Very exhausting.
Well, let's turn the spotlight to some stocks that acted best yesterday. And surprise, surprise, one of the places to be was Apple. So did you think that Apple's behavior changed the composure of the stock in your eyes?
I think it started changing last week. So almost yesterday's down open was a gift, because on last Thursday and Friday it started perking up. Then Samsung came out with their new phone, and on Friday, boom, blasted off with some authority through the level that we were talking about. 440 to me was a key level. It started the day before, put on a call spread, bought some common. People in the virtual trading floor have seen me pretty much be long Apple since that Thursday. I've tried it a few other times with some paper cuts, but the reason why we all get enamored with it, because finally when you get a good move, it makes back for the paper cuts if you don't have gushers, and adds a little green to your P&L. So yesterday, if you look at the chart, we came in, it was negative with the futures. So you had the chance to actually buy it yesterday. Okay, this was when, to me, it started to act a little bit better above this 440. This was Friday, took back the 8-day, opened lower yesterday. You could have added to it. It was on the price point sheet when it went through 440, 423, and boom, nice close. So I do think, at some point we're going to hit the 50-day, and then how we deal with the 50-day will give us some clues on short-term composure. But overall, it's been a nice tradable bounce, and if you look at where we came from, it could be just a start. So again, this stock has a lot to prove. 50-day moving average is the next obstacle. Maybe the first time it'll be resistance, but then if it can reclaim it, some are even saying that this oversold bounce could take us back to retest the 200-day, which comes in around 536. So, I would see if we could stay with this trade. Last time we had a nice tradable move, it was good for like 80 points. So far, this one's been, decent so far.
All right, nice to see that finally happen for Apple. And Yahoo managed to bounce yesterday and close well off its lows. What were some clues maybe we could have picked up on that was going to happen?
Well, Yahoo's been a chosen one this year, also in the 2013 projections, and it had like a 5-6 day controlled pull-in. So a lot of people were like, how do I get in Yahoo? And I think I bought it on either Thursday or Friday of last week, added a little bit yesterday, because you want to buy a pull-in. Last time it was tradable was when it broke above 21.45 and the core trade was at 16.60. So if you miss some of those, you always want to get a good entry, because entries and exits do matter. You look at the chart here, you will see that this was the peak in Yahoo, and then it lost the 8-day, came into the 21-day, and every other time it's come into the 21-day, it's been more of an opportunity. So here was the last time it broke out. So this was a spot that it could have came down to, and it wound up touching the 21 days. So I do have a small position in Yahoo. I think it was upgraded to an outperform today. So I think if it could get above this little area of 2230, perhaps it gets back in motion. And then at some point, I do still think on the long-term chart, it could take out the recent highs and get towards 24 to 26.
And then over in gaming, Las Vegas Sands was one of the first to go green yesterday. And though it pulled in during the last trading hour a little bit, it was able to hang on to most of its intraday gains. So could we see some continuation today?
Yeah, and it's good to see anything that goes green first in a sea of red is something you gravitate towards. And the whole gaming sector hasn't been a leadership sector for over a year. But there's been some spots where you could have opportunity. We started talking, I think, a week or two ago when you saw this wedge type pattern, to get back involved. You look here, you will see in LVS that, this was right around here. And although it hasn't been a barn burner, it's been slowly trickling higher. And I think at this point, if it can get above 54 with any type of authority, then your next level is this pivot. But then overall, you could see how it hasn't hit a high since, I don't know, April of a while back. So at this point, you've had a few decent trades in LVS, one to start the year when it broke above this channel with a nice gap up. There's your peak. And now, it's starting to wedge again. And I'd say the longer it stays above this apex of the wedge around 52.50, the higher the probability it takes out this peak and then maybe gets on its way back to, the old highs up there.
And Las Vegas Sands wasn't one of the only gaming stocks acting great yesterday. Caesars hit a new intraday high. This stock has just been on a run. Does it need a breather, or can the party keep going on?
Well, you never want to join the party too late, because
right.
People start falling asleep in the corners. But anyway, at this point, this stock was a new issue. We played it a lot more last year, and unfortunately, I lost sight of this one. A lot of guys, even on the Twitter street, like, hey, your old friend Caesar's been waking up, and I kind of ignored it, and just shows you can't be everywhere. But overall, it does show you can be a stock picker. There's healthy action in spots if you're willing to educate yourself and learn how to look for it. You look at Caesar right here, wow. This is when it woke up in the start of the year above 9. Quick move, nice retracement, then went above 14, and here's the highs. And here are those old IPO highs. So this is why people get excited about IPOs that have come, to the public market within a year or two, because you have thin, tight floats, and if they prove themselves, you could outperform. So overall, Caesar, at the highs here, I wouldn't chase, but it is in the game that with this tightly controlled float, perhaps you could see higher prices. Just make sure it continues to ride the 8-day the way it's been doing ever since it broke out in February.
And then over in the banks were mixed, but they did lead the market lower, all except for Bank of America, which acted like best in breed. Did its action make you even more of a believer in this stock?
Well, it made it easier to hold. On Friday, this was one of the stocks that I had going into, because I've been also holding this for a while. It's been one of my swing trades. So it acted really well on Friday. Any stock that goes out on the highs on a day when you're lower in the indices like we were Friday gives you a little bit of commitment to stay with. And then all of a sudden yesterday with the futures down big, like, okay, is it going to hold up? And it was one of the first ones to go green. Maybe it was because people knew Meredith Whitney was going to come on TV after the close of Maria. Who knows? But overall, you look at the chart, you look at the trend, it's been real strong. Here's your core trade when it went above 995. Then it wound up hitting its little peak right around here. And now you've seen another channel going sideways. It did poke its head above that channel into the stress test. So it's also showing you another level right around here. So on the M. Whitney news or whatnot, it is above this 1270-ish. If it could stay above 1270 at some point, pretty short term, I do think it could see 13. She said 15. Then you go to your weekly chart from my 2013 projections, and I think my focus was back to this area, which was a little bit north of 14. So there's still some room on the weekly chart. I would stay with this.
And finally, Hewlett-Packard has been on the move since beating earnings estimates on February 21st and still managed to tack on another 3% yesterday. So is this where we should have done a little trim and trail action, as you like to say?
If you were long it, I think, this is a gift. I don't know how this thing was reborn. This is like a pain trade that you read about where everyone left the stock for dead, changed composure. Everyone was talking about dogs of the Dow going into Christmas, and it turned into not only a dog of the Dow, it turned into a green dog barking up a tree here. I don't know, or at least scaring the bears up the tree. You look at this chart here, it's like, wow, that's powerful. Here is when it was left for dead coming into November. Filled that gap. That was one sign that this was a little bit of over emotion. And then you had a nice gap here to start the year where you could have traded against, and then another nice gap with earnings, and now it's just trending and trending higher. I would not be a buyer of this stock up here. I'm sorry. If you're still long it, even it's up a little bit today, trim some. If you're a believer long-term in Hewlett-Packard, congratulations. I am not. But overall, this has been one heck of a move, and if you enjoyed it, you're a better participant than me or whatnot. I would not chase Hewlett-Packard and start buying it. I would trim and trail it. And if you've been shorting it the whole way, I'm sorry. I almost did it too, and I didn't, thank goodness. Maybe today, if you look for some type of red dog reversal, you could be short, but it goes with the whole thesis where you short a level versus a level. The same way you don't try and catch a falling knife because it could, create a gusher. Don't just short because you might run out of funds and it could put you out of business.
All right, gotcha. So coming up, we're going to go on the flip side and take a look at stocks that might be weakening. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with stocks that look like they might be getting weaker. Starting with Amazon, that took a dip of 1.5% yesterday. This is stock that has been trading in a range for the past few months. So how much weakness, further weakness, would you say we should be bracing for?
Last week, this was one of those stocks that showed some signs that momentum was leaving some of the chosen names. Ever since earnings, when it failed at that high, it's been a very choppy trade, more of an active trader's dream versus an intermediate guy. And if you look, we talked about two price levels. You go to the chart, first of all, this is when it could not break above that high. Remember, it opened up there and failed. Well, PS wound up holding support for a while. I think it was a nice trade right around here through 267. But then once you see momentum leave, you have to leave. If this stock was any good, it should not have broken 270. Okay, if you remember on that downgrade, it was down $12, $13, so they couldn't save it. And now here it is into some bigger support. I guess see what type of bounce it happens. If it, a small bounce happens and it's feeble, chances are next time it sees this 255, 257 level, you might even be able to short it down to the 200-day. But on a different time frame, if you go to your monthly chart, if you've chosen Amazon throughout the course of the past 5 years or decade, you don't care about this small little time frame. But I think you should care that if we do close below 250 or we change one of these longer term macro trends here, you better watch out, because you have to know your time frame. And if this thing starts getting below 250, you're allowed to even sell some winners, even if you've held it for 5 to 10 years. You just have to pay the tax man.
Not fun.
Which we don't love to do.
Right. Google also fell victim to market weakness yesterday. The stock closed down 0.8%. Now, we had talked just about a week ago about how the stock might be losing steam after it continued to sell off despite recent upgrades. And yesterday it lost its 21-day moving average. So does Google just need some time?
That's what we're trying to figure out. We're trying to figure out, is this the curse of the $1,000 price target? What's interesting, when we were trying to hold it when it looked really good technically, it got downgraded like 3-4 times, and every time it opened lower, we're like, oh, it got downgraded again, it would go positive. And then above 800, I don't know exactly how many, but every time it got upgraded to 1,000 price target, it would open up and fell. And PS, we now just went from 844, in this upper area down through the 8-day into the 21-day. But this is an area that we spoke about that was a nice trade for some active guys when it broke above 808, and that's what we're retesting. So if you are a Google fan and you want to get those Google glasses and you think that $1,000 price target is going to happen, hopefully you didn't chase excitement, and this would be a spot I'd rather see you buy. I think if you want to trade it versus 801.47, and at least your risk reward is okay on buying a dip here versus chasing the excitement. But I'm actually flat Google, and I will look to see if there's any relative strength today. Because some are saying also, you've also seen weakness in Netflix, in LinkedIn, in Amazon. So now the trend or the trade has changed, where maybe it's now buy Apple, sell some of those. So I just want to see, what type of ARB you have there. And
do you think this is another case where we just need to get that round number price target out of our heads?
Yeah, I think that once you get that $1,000 price target, it turns into a blimp. And you know what everyone tries to do with a blimp? You try and pop it. So I'm a big proponent. I know people don't say it means anything. I am, you're an $800 stock, you split that damn stock. Otherwise, the market does it for you. There's just so many people that will go out and buy an $800 stock and feel comfortable. Split it 4 for 1. Do something different, because the buy audience gets saturated, and that's what I think happened more with Apple. So if Google wants to be high and mighty and try and swing around whatever it is they do in order to have that high price, it might come back to haunt them.
All right. Well, let's take a look at retail, where Lulu had a big gap down yesterday and finished the day down 4%. Now it's approaching a major support level around 65.50. So do you think it might pick up some buyers here?
Now this is the case of where someone always knows something. I was long this, I think it was Thursday, and I'm like, if it breaks above 70-ish, it looks technically good. And then on Friday, it showed faulty action on top of getting a downgrade. So with that, I wound up losing money, but I stopped myself out because I'm like, this is not showing momentum, and I'm not a Lulu fan long term. I haven't been in the stock for months or years. I was in it if it wanted to break out and go above 70. You look at the chart here on what took place there, and this should not have happened, okay? Just so you could see technically. Here's where it looked good, right? Remember, it closed right here, looked as if it was going to break above this price point, and then what happened? It got negated. You never want to see, a nice day like that just get engulfed. So that got me out of the stock before yesterday, and well before, the news that came out today, where it has it down like another $4 or $5. That's just, so if, you say you're not someone that has any connections, well, you don't need any. You just need to watch, the price action. And that could have told you that something was coming out pretty poorly here. So now at this particular point, next big support comes down here all the way below 55. And that's where I think, you could look at it, or maybe right around 60. I don't know exactly where it is, but I think it's trading somewhere around here pre-market.
All right, and finally, Cirrus Logic closed the day down over 2%. It's trading below all key moving averages. At what level might we find it pick up even more sellers?
this recent pivot, I hate to press a short in the bottom of ranges, but this is just not buyable yet. It's below every key moving average. It's showing relative weakness, and I know that people say, oh, but they might be included in the next, Apple product. If they do, let it gap up, traded versus the gap. Right now, this has been very weak, and I would just stay away.
All right, time for some quick hits here. Goldman closed down nearly 2% yesterday. The stock is usually more sensitive to the European debt crisis, but technically speaking, how well did the stock hold in on a macro level?
Ever since it hit its high, it's lost its leadership, prowess, so to speak. But some are saying it just had a really nice run, and it's just basing. And that could be true also, because it did have an enormous run. If you look at the chart here, look at the last time it had its big move. Once it gapped up right around here, it's been one heck of a trend following the 8th day until finally it broke it. And it did this during the Italian election crisis, so to speak. And then you had it rally back up. And overall, I still think it's acting well. Here's your upper range. If it were to start to break below 150.46, then it could test a 50-day. I think this is the intermediate line in the sand. If the market wants to regroup and continue higher, if this thing starts to trade back above, 155.63, it could see the upside move. So I think this is very important, though, for overall direction of the market. Whichever way Goldman resolves will give us some clues whether the S&P will make new highs in the shorter term, or if we need more corrective activity.
We love those clues. Love to pay attention to those clues. And with fear in the markets yesterday, we saw money rotate into gold. The GLD reclaimed its 8 and 21-day moving averages. Do you think we'll see that continue?
I think it's a start. A lot of gold bugs have been bugging out because they don't like the action here, and rightly so. This is also one of those scenarios where you have multiple time frames working against you or conflicting. Last time there was an actual trade here was when the intermediate trend broke right around here. If you look at the chart, this was that symmetrical triangle that I was actually cheating to the upside, and I lost money, but at least I stopped myself out once it broke this 161. Since then, it came all the way into more of a macro support area. So you want to combine another time frame, and here it is right going across. So at this point, you've had a little bit of a feeble bounce off this macro support. Now the question I would say, if I was playing this short term, see if it could hold yesterday's low. See if it could stay above the 8 and 21 day and do something different. So I would say if you don't want to micromanage it, really 155 would be important to me, but really maybe 154.5. If this stays above 154.5, stay with it. If it starts getting back below 154.5, then it was just a feeble bounce, and chances are the stock market might be going higher. All
right, and then MGM had some nice action yesterday. Could it be setting up for higher prices?
I like this. I like the stock. I like the news that came out that KKR, he can come out and buy up to 25% when he wants. This stock, even though it's had a huge move off that low way back when during the crisis, it's still nowhere. The last few years I've been going back to it here and there, making a little cash flow. It did ignite, if you want to look at the chart, about a week ago, and I've seen some commitment to it. This is when it broke above this 1260. Now it's trying to hold higher. So I am long some MGM, and it's really going to have to get above this 1350-ish, to get going again. So at this point, I am in tier 1. It starts taking out 1350-ish with a lot of volume. I will get to tier 2, and then if you go look at the weekly chart, it's still not great, but how I love long channels here, and this is starting to be a really, really long channel. So at some particular point, economy gets better, Vegas gets better, and this and that, and room rates go up. It could be a more of a sustained move back to 16, maybe 20.
And Facebook has seen some weakness recently, but rallied right off the open yesterday. Think continuation is in store today?
This stock, give me silence. I feel like we had a decent trade there, to start the year, and then recently it's just been under pressure. I don't know, because it hasn't performed this quarter. Maybe it needs more time. I don't know. If it would have traded through 26.35, I probably would have been stopped out. Since it opened below and I gave it some time, I'm still in the position. If you look at the overall chart, it's still building, and sometimes IPOs take that much longer to prove themselves. And right now, Facebook still is not a media darling. It still has only reported, I think a few quarters worth of earnings. It's still, in this descending channel, so to speak, hasn't been able to break above it with any type of authority. Yes, you will say it positive. You have a new point of reference. I'm still long it. My stop now is 25.78. And then if it were to, take back this moving average, maybe trade above 27.10 with some authority, maybe I would add to it. But every time I've added to it, it's hurt me. So at this point, I'm in some, and it's going to have to do something really, really different in order to get me excited again.
All right, we saw some red dog reversals in the market yesterday, starting with Baidu, which put one in after 6 down days in a row. Should we keep it on our radar?
I think it's still broken. Maybe you get a few points. Resistance comes in at 90.
All right, and 3D Systems had a red dog reversal as well. It reclaimed its 200-day, closed at highs. Should we look for a continuation to the upside today?
This one I went to just because I've traded it and I haven't looked at it in like 2 weeks, and I'm like, wow, this thing's been so battered and bruised since the founder announced that he sold half his stake. Who knows? Maybe he sold half to some funds to help support the stock. I don't know. We did point out some weakness in this group a few times, giving you levels to be short, levels to maybe be stopped out if you were long. The first wake-up call is when this wide-ranging engulfing bar happened here. You did get some type of bounce back up, and then it failed. This was one of your stops. Then here was another one of your stops. I remember playing this bounce right here. Went back to resistance, failed, and then yesterday, decent action. I would say today, if it can get above this 2-day range, maybe it can get up to here. But overall, the stock is now in a really steep downtrend, and it should be just treated as a day trade, so to speak, because it's going to need a lot of time to reprove itself and get back in the good graces as it went all the way to the 200-day, and the market's far above that.
All right, so wrapping things up here, what will you be focusing on heading into trading today?
I'm just going to keep managing my positions, see if I can put some new ones on, see if I salvage a few, see if the market continues to hold above yesterday's low. We talked 1545. The longer we stay above 1545 in the SPX, I think the more confidence the bulls will get with this upper level, and then perhaps we have a chance to break above last week's highs. If we start giving way at 1545 and the noise starts to get louder around Cyprus, and maybe the vote goes array, and maybe Big Ben says something that the market doesn't want to hear tomorrow, then we'll see 1530, 1534, maybe lower. So at this point, make adjustments, feel comfortable. Stick with the rally if you like your positions. If you're looking to short, there are things to be short out there. Just don't short the strongest stocks because you think it's up too much, because they can go higher. And keep working on your skills, because there is a lot of money there if you educate yourself.
All right, that's your morning call for this Tuesday. Happy trading, everyone. Have a great day.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.